I'm going to show you the one stock pattern you need to learn in order to trade stocks properly. If you study these patterns, you can learn to get in at the right time. See this U shape in here and then this tightness in price, and then you get a breakout. And then you get another even little tightness in price and another breakout. Then you get the rally, okay? Memorize this pattern, okay? You can go back on any chart of any of the big stocks that have broken out. You can study this pattern and see that it works. All right, once you see this pattern, you can't unsee it. You'll see it everywhere. Now, it doesn't work all the time, which is why you've always got to set your stop, okay? So let's go back on NVIDIA. This breakout was in 2021. Okay, May of 2021 is when we got that. Let's go back even further in the chart and see. Look, here's the COVID. Okay, you have, again, this kind of a shape, this kind of a little tightness in price, right? Maybe here, just you're looking for some general tightness and a breakout. And of course, you've got to set your stop, all right? And you can see that the stock never violates your stop, and you get this move from 75 all the way up to about 150, okay? That's a double. Look, even in here, you can go back and see right here, you get this broadening consolidation formation with a little bit of tightness in price, and then your breakout and a rally. All right, we can go back even further. Look at here. You've got this kind of a shape with a tightness in price. It gets super tight in here, and then your breakout. You can set your stop underneath here and just take this move. That is a move from 30 bucks into 60 bucks. So again, a double. Let's go back even further. Same stock, NVIDIA. You see how this works? Look at another one. Did you see this one? Here it is. Here's your tightness in price, and then here's your breakout. Okay? Set your stop, never gets violated, and you get the bull move. That is from 8 bucks to $30. Over a triple. Let's go back even further. Here's another one. Here's your shape. Here's your tightness. Here's your breakout. Set your stop. Okay? You get the breakout. You get the move. This one even corrected, but look, never violated your stop. So if you can hang on, you get back up. These moves happen throughout the entire bull run. Let's go back even further. Another one. Do you see it? Here's the shape. Here's your tightness. There's your breakout. Okay? Set your stop. And then you get this kind of a move. Right? Look at this one though. Sometimes it doesn't work out exactly like you plan, which is why you need to be adaptive. Here's this one. Here's that tightness. And you only get, there's your breakout, but you only get this kind of a move. And had you set a stop here, okay, look at that. Sometimes it doesn't work out. That's why this is trading. Sometimes you get stopped out only to watch your stock rip right back up. But look what happened. If you were patient, you could have had, again, this one and the tightness in price right at the exact same level, okay, basically, as that false breakout. Right? So sometimes that's what it requires, is getting back in to the same exact stop. Here's another one, okay? This is the one that set off the entire NVIDIA move back in 2013. You see it? There's your shape. here's your tightness, okay? Even here's your tightness. You got two ways to look at that. There's a breakout. Maybe this one stopped you out if you set your stop right here, but then look at again. You get another tightness, okay? See how that goes? Sometimes you get stopped out. If you were following this, you have this kind of a move, you have this kind of tightness. Maybe you figure this is your breakout. You buy there, all right? You're buying right in here, but then you're setting your stop right below here. You get stopped out on this move, right down there. But then, if you're doing it right and you're paying attention, you can see this tightness in here, okay? Then you get this breakout. Now, that's the real one. Sometimes you get false breakouts. Now you set your stop. You never get the violation. After a rally and the subsequent pullback never violates and you get the rally, okay? So you can see this on any chart. You want to try another one? Look at NVIDIA. Let's stay with the N's. Let's try Netflix. Look at this right here. Now this is in 2021. Look, how far ago was that? Well, yeah, now it's down, right? Look what happens here. You get this kind of a move, right? These long consolidations, then you get that tightness, you get your breakout, you set your stop, and you go along for the ride, okay? Selling is a different matter. You got to know when to sell up here, and those are going to be, sell points are dictated by your own personal trading results. So if you have an average gain of 14% across hundreds of trades, you know once you start getting into 14, 15, 16%, you're probably not going to make more than that. So you got to trim some. Look, Netflix is there. You can keep going and see this. Same thing with this. This is COVID. You had that shape. You had the tightness. You get the breakout. You set your stop. Okay? And you take the ride. Let's see. Netflix. Go back even further. Go back. Again, see it? There. Maybe there. Maybe still here. There you go. And there's your tightness. There's your breakout, and you catch the move. We can go back even further. And there it is. You see that one? Look at that. You got this shape. You get your tightness. You get the breakout. You set your stop. And you get the move. Okay? That's the way this works. All this is in here, in this move, this shape, you've got supply being soaked up by strong hands. Weak hands are selling. They're selling all this while the strong hands, people who want to own this, are buying and buying and buying up all the supply at the same time. The weak hands, people who don't really know what they own, they just want to get out, or maybe they're operating on a different time frame and they bought way back here on the time frame and they've already got, a good gain. Or maybe they're just traders and they were buying here, and so they want to take their profits and sell here because they're only in it for this kind of a move and they don't want to stick around for months and years. So there's all kinds of stuff that's going on as time is passing in here. But what's happening is this is a bullish kind of setup here. This is what's going on is throughout all of this lowness, you get a lot of emotion. There's a lot of bulls versus bears battling, and it's just choppy and choppy, and it's wearing you down, wearing out the guys who have no conviction, and it's soaking up the supply because the real guys who want to own it, the big money, is buying up all the supply in this, and they can wait it out because they are operating on huge time frames, because they're operating huge portfolios. So they're just buying this up because they need to put money to work for the next 5 years. And then what happens at this point in time, right here, is that all the supply is now soaked up. And you get these little breakouts. You see that breakout right in there? This one, right here. That is showing you that all the supply is soaked up at this price level, at this, call it $100 price level, right? All the supply beneath $100 is now gone. The big guys bought it all up. And then what happens is supply and demand. In order to get more supply to come on the market, the prices have to go higher. Okay? And then you starts to bring out some of these guys who maybe got big positions and now they need to rebalance because they were buying all throughout this level at 100. Well, maybe they'll take some off at 125 and deploy it into something else, but they're not going to sell it all because they're operating billions and billions of dollars in assets. So they got to be buying, they get selling some in here, and the stock goes higher. Okay? That's the way this works. It's just showing you the psychology of supply and demand for this stock, and that's why it works. It works now in 2022, and you can go back on any chart, and it works going back for every single stock, even other markets, going all the way back into the first recorded markets in Amsterdam. It just works this way because it's showing you human nature and immutable laws of supply and demand, which both human nature and supply and demand, it does not change over time. These are universal laws like gravity. So that's why this stuff works. Now, it's not going to get right all the time because this is just a picture of a graph of daily price fluctuations. So that's why we always, part of this, identifying the pattern, is just one part. The second part is putting your stop, because sometimes it doesn't work out and you've got it wrong. Sometimes you think you've identified a point in time where the supply has been all soaked up, but you're just wrong. It's only mimicking that, and it's not really. Sometimes there's guys that have supply that you don't know about that come on board. Sometimes anything could happen in reality. A new competitor comes along that changes people's minds. Anything can happen. That's why first part is identify the pattern. The second part is always put your stop. This is the most important part. This is the only thing that gives you an edge so that you don't take this stock all the way down if you're wrong, and then wonder what the heck happened when you're sitting on $10 stock that you bought at 50. This is the only thing that gives you an edge as a retail trader over the big boys, is placing your stop. That's the only thing that is going to get you into another level of trading and investing properly. All right? Thanks for watching Paul Parra Merchants.